this is Dan Collins, Editor-in-Chief of Futures Magazine for Traders Exclusive. And we're here on the floor of the Chicago Board of Trade on January 3rd, so I thought I'd offer some more New Year's resolutions for you as you look into trading in 2014. The first one, as we mentioned before, is to be your own expert. We talked about how the machinations with the Fed tapering has gone on this past year, and pointed out that a lot of the so-called experts may have, ulterior motives in how they're, what they're putting out there, and they may be trying to affect things or affect markets. So if you follow what they say, you're better off. So it's important for you to be your own expert. Also, as you go into 2014, it's important to have a diversified portfolio. Even if you trade futures, if you don't have your investment income in some alternative, you may be in trouble. There's been a lot of stories in the press, particularly in Bloomberg. The CFTC has even launched an investigation onto fees based on a pretty suspect story. And what people need to realize, what they need to realize is that for most people with 401ks and other investments, they have an allocation to equities. Most people do. So if they're criticizing the alternative, the managed futures space, they're indicating that you should have nothing in there. So it would be just a pure equity and bond portfolio, and that's a little bit dangerous. We've seen the greatest, technically the greatest equity market rally in the past 5 years during the Great Recession and this kind of slow drip growth we've seen that. So yes, maybe things are getting better, but that doesn't necessarily mean the market's going to shoot up. If we can have the greatest rally in a really poor period for the economy, we certainly can have a flat period or a pretty serious correction as the economy improves. It's happened in the past. It's kind of the buy the rumor, sell the fact thing. So you should definitely have a diverse portfolio. Be aware of changes. We talked about the Fed tapering and tightening, two different things. Learn the difference, because I think in 2014 you can follow the numbers a little bit, because I think there's some normalcy with what the Fed's going to do now in its tapering. They're not going to tighten in 2014. It won't be until 2015. So when you're looking at treasuries, it's not going to be a one-way market. It's going to be an interesting market to follow. Don't assume it's going to be, straight up with rates. Look at that and have a great 2014 year in trading. This has been Dan Collins, Editor-in-Chief of Futures Magazine for Traders Exclusive.